Imagine that you had a friend who was incredibly out of shape. Then when you asked them why they never went to the gym, they told you that they were waiting until they got in better shape to start going to the gym. You'd sort of look at them like they were crazy, right? It doesn't make any sense to wait until you're fit to start going to the gym, because getting fit is the result of going to the gym. You're not going to get the result without putting in the work. Believe it or not, finance actually works the same way. Many people never start investing because they assume that they need thousands of dollars to get started. Nothing could be further from the truth. In reality, having thousands of dollars is usually the result of consistently saving and investing. Waiting until you have thousands of dollars to start investing makes just as little sense as waiting until you're fit to start going to the gym. The reality is that you can start investing whenever you want, even if you have a low income. You just need to learn how. Luckily, I'm here to share a solid strategy that you can use to invest in stocks if you're on a low income. But before I do, I just want to please ask that you hit the like button or comment below so that I'm making the type of content that you want to see. And I really appreciate the feedback. Thank you. So, why should you even invest? Who really cares? Well, you should. And let me explain why. Investing your money is one of the best kept secrets to becoming financially free. For example, if you read the book, The Millionaire Fastlane, the author MJ DeMarco describes his journey of starting and selling his company for a hefty profit. With this money from the sale, he invests in stocks that pay him dividends. Every month, he would make about $10,000 just from his dividend payments. Not only does he never need to work again, but he's making more money than most people who are working full-time. Imagine how different your life would be if you received a $10,000 check in the mail every month. This is the ideal end goal from the strategy that I'm about to share. Now, MJ DeMarco made a few million when he sold his company, and for most people, this isn't really an option. However, that doesn't mean that you can't reach the same end goal. Some people are blessed enough to have large sums to invest, just like some people are born with tons of muscle mass. However, if you're on a low income, then that just means that you'll need to work a little harder for it. With that said, let's take a look at my strategy. To visualize this strategy, imagine that you have the seed of a fruit tree. Right now, the seed is worthless to you. Plant it in fertile soil. You water it and you let it grow for several years. It will eventually grow until it's a full-grown tree. Once it's full-grown, this tree will require very little work but will produce fruit for you every week. We're going to do this with your investing account. Your investing account is going to start small and insignificant, but eventually it'll be much larger and will pay you consistent dividends. If you're on a low income, then it's safe to assume that you do not have much money saved. This might be a couple thousand, hundred, or it might even be nothing at all. Luckily, it doesn't really matter what your starting point is. What matters is how well you can stick to a consistent saving schedule. Step 1 is going to be determining how much money you're able to save on a weekly basis. I know that you're on a low income and your bills are probably tight, but this step is incredibly important. If you can't get into the habit of consistently saving, then you may as well turn off the video right here. If you know this is something that you struggle with, I have 2 tips for helping you find extra income in your budget to save. The first is to set aside your savings right when you get your check, even before you pay your rent. This will automatically force you to alter your spending habits to match your lower income. You know how taxes are withdrawn from your paycheck before you even get it? Do the same thing with your savings. My second tip is to pick up a side hustle of some sort. Although this will require a little extra work, this is additional income that you'll be able to save. If you can find a side hustle that makes you an extra $100 each week, then congratulations. You just found $100 that you can save. The more money you're able to save, the more money that you'll eventually have down the road. That said, the most important part is that you make it a habit. It could be anywhere from $20 a week to $100 a week, or even more. Once you've created the savings plan, it's on to step 2. Before you can start investing, you'll need to open up a brokerage account. There are plenty to choose from, but I'd recommend using Robinhood, Webull, or SoFi Invest. I recommend these brokerages because they offer a service called Fractional Shares. Fractional shares make it possible to buy a part of a stock without needing to buy the whole thing. This is the equivalent of paying 25 cents to buy just one slice of bread instead of $3 for the whole loaf. Fractional shares are going to be a big part of your strategy because you probably won't have enough money to buy whole shares in the companies that you want to. Some share prices of stock can be incredibly high, which discourages people from buying them. For example, Apple stock is $150 per share, which is already a little high. If you're saving $50 per week, then it'll take you 3 weeks just to afford one share. If you were saving $50 a week and wanted to buy stock in Amazon, one of the most valuable companies in the world, then you'd need to wait almost a year and a half to buy one share. Luckily, buying fractional shares solves this problem. Now, on to step 3. By this point, almost every brokerage in the world offers automated investing. Automated investing is a service that will automatically pull money from your bank account each day, week, or month and invest it for you. This makes it so that you don't need to remember to transfer money every week and run the risk of forgetting. You can think of automated investing like watering your fruit tree seed. It's going to take a lot of time and water to turn that seed into a full-grown tree. On the same note, It's going to take plenty of time and lots of automated investments of $20, $50, or $100 a pop to get to a point where your investments actually start to grow significantly. Automated investing is also advantageous for one other reason. Slowly investing your money over time, as opposed to all at once, is a proven strategy to protect yourself from risk. Think of it this way. Let's say that you had $10,000 and invested it all at once. Then the stock market dipped 30% tomorrow. Your money would have reduced in value to $7,000, and you'd have to play catch-up. Spreading out your investments over the course of weeks and years can protect you from losing a large chunk of capital all at once. On that note, let's talk about what you should actually invest in. Real quick before we do, if you've enjoyed this video so far, please hit subscribe below so that you don't miss any future videos that we put out. Once you do subscribe, don't forget to hit the bell notification so that you'll get a small alert when we do post. Done? Awesome. Thank you. Now let's get into what you're actually going to be investing in. When it comes to actually finding a place to invest your money, you're not going to try and pick the best stocks. Instead, you're going to invest your money in a low-cost index fund. This is an investment tool that tracks the prices of many different stocks and essentially mirrors the return of the entire stock market. There are plenty of index funds to choose from, but three of the most common are the money sign SPY, money sign VOO, and money sign ONEQ. Each of these three funds will track the return of the stock market. This means that you can expect your money to grow at a rate of about 8 to 10% per year. There you have it. This is a fairly simple strategy to start investing in stocks when you're on a low income. Let's quickly run back through the main points. Step 1. You need to find a way to squeeze consistent savings out of your budget. This can be as little as $20 a week, but the more that you save, the better off you'll be. Two good ways to do this are to save a small portion of your income before you pay any of your bills, or to start a side hustle that will produce more income for you. Step 2. You need to sign up for a brokerage that offers both fractional shares and automated investing. Three good options for this are Webull, Robinhood, and SoFi Invest. Step 3, and this is the easiest one. Now you just need to set up an automated order to buy stock in an index fund. Make sure that this order executes once a week. This way, the money that you have investing in the stock market will continue to grow slowly but surely. If you found this video valuable, please be sure to follow the very first link in the video description below and subscribe to my newsletter. By subscribing, you'll receive my most valuable tips for investing, any potential stock picks that I come across, and more informative content similar to what you've just watched. Most importantly, I don't believe in sending automated emails or spamming my subscribers. Instead, you can trust that each email that I send will be filled to the brim with valuable information that's sure to make you a better investor. Thank you so much for watching. I appreciate it, and we'll see you next time.